Good morning, everyone. Welcome to our Monday morning trading room. Hold on one second here while I get the screen share going on. Thank you for your well wishes. Yes, I'm feeling much better. I think I sound a little better as well. I still have this nagging cough, so hopefully I'm not going to be coughing in anybody's ear today. All right, let's take a look here what's going on here this morning. It looks like Friday's session waffling a little bit out of the open. The market turned, headed down, and then toward the afternoon rallied a little bit. Pretty quiet through the Sunday morning Globex. And here we are now, right out of the open, kind of filling maybe that teeny tiny gap that was there. Market leaving off, I don't know what, 54.22. And we opened 54, 24, 25, kind of got down there, and now they're trying to put in a little bit of a rally. Looks like they may try to get up to the highs, Friday's highs. But it's still early. We got lots of time here. Also watching crude and the euro this morning, just for a change of pace. The euro on a little bit of a rally, and crude opening with a rather substantial gap on the morning. Here's crude now on the eagle and trading left off around 52.28, and they open up here around the 52.90, 53 area. So there's a little bit of a overnight gap there. We'll see whether crude tries to get into there or not. All right, we got a first micro macro cross here, which seems to have followed through, as well as right on the open we had the #1 cloud crossover signal. That looks like it got a little traction as well. Aspen, I'm not sure I understand your question. Aspen writes, had a question how to trade big OSC type market if we get one today. Please give your style. What do you mean by OSC? We're near Friday's highs now, around this 54.34 area. It looks like Friday the market topped out here at 54.36. Oh, I see. Aspen says oscillating swings, OSC, oscillating swings. Well, I don't really change my trading style much if the market is making large swings. Like, let's say you're looking at this and you suspect, maybe we're going to get into a large trading range. There's a couple of things you can do. If you're the more aggressive type, you can try to short the top end of the trading range and buy the bottom end of the trading range. And you would do this with market orders or limit orders. And generally speaking, you would probably look to scalp out. It's not the type of trade scenario where you would try to short up here and then try to work the trade all the way back down toward the low. That doesn't seem likely. But to get a little scalp out of it, maybe a little swing, yeah, that you could do for sure. The other thing to do is just to trade the signals as they develop, and that's usually what I end up doing. So we're getting a hard edge bounce signal here. We've got an opportunity at a second push entry, which is probably advisable given that we are at Friday's highs. Oh, way to go, Tony. Tony grabbed that first eagle signal, that first in-sync eagle signal. That seems to have been working out pretty well. I'm looking at this hard edge bounce and debating, can I cover that? Ooh, that's a big one. This is a little risky. It's still early. It's only 10 minutes into the session. We're at the highs. There's going to be some sort of reaction here. I've left a very deep stop, but only with the intention of doing something with it quickly. couple notes here in my trading journal. All right, let's see if they can press on through there now. Obviously, I'm a little bit late on the entry using that second push. Probably in about 5-6 ticks late, but if the momentum is there, it should not be too much of an issue. Got quite the struggle going on this bar right now. Come on. It's always tricky trying to buy into a rally. Normally, traders wait for a pullback to occur. And I might be getting pretty quick with my stops here in a moment. Maybe taking them right here below this 54.34 area. Okay, that's all I'm going to give them. Now, the best stop is still down here. That's going to give you the most staying power. It seems unlikely that stop is going to get hit. just having too much of a struggle here to get over the high. Come on. Wow, what a bar. We've been working this bar for, what, 20 minutes? Oh, only about 10 minutes, but it seems much longer. Just a real struggle here. What's the high of that bar? 54.38 3/4. So 54.39 is the obstacle. We need to see the market trade above. Or it's likely to give us a little bit of a reversal. We got some serious buying going on. Geiger counter pulling hard over to the buy side. Looks like our eagle signal out of the gate found its profit target. Yes, it did. We just got a real struggle going on here. Robert asked, are you looking at the Raptor? I'm showing a number 1 signal. Yes, we are looking at the Raptor here on the NASDAQ. And I'm assuming you're printing a number 1 right here. Is that it? Darn it, here comes the reverse. Okay, so very likely going to get tagged here. All right. Well, they were taking. It was worth a try. Like I say, the deeper stop. Had I left my stop down here, then we would still be obviously in this trade. I just did not feel like letting the market pull too deeply against me, so I opted for the early stop out. We'll try to get a handle on this market as it pulls back a little bit now. Boy, we got quite the struggle going on here. They do not want to commit one way or the other. Got a macro pullback signal here on the hawk, which, oh darn it, now it's running away on me. Could probably set up to buy something like that. Okay, what I'm thinking we might see is a retrace to the hard edge on the Eagle, perhaps here on the Raptor. Yes, Tony mentioned earlier that Janet Yellen has an announcement this afternoon, so that could put the NIX on the market this morning. Just kind of watching and waiting here. Getting another chance at this macro pullback signal that developed earlier. We've got the warning dot printing again. The market retreating a little bit. The hash mark's going to print right there at 54.35 quarter. For another 3 ticks, you could take it above that little swing high. I don't know if I like this trade so much because I've got to get to the high of the day or through the high of the day to find my profit objective. If I dial it down and just take a single on it, I could try to enter earlier. I'm trying to cover the trade somewhere around where the hard edge is at. You see the hard edge is around 54, 26, 27, so that's approximately where I've placed my stops. And because this is a single, I'm going to try to run it out. And we're at the top of the hour, which is probably not the best time for me to get involved into a new position. Come on, get up there. Excuse me. No, Tony, you asked a good question. Tony's asking a question about the Top Step program. For those of you who are interested, it's actually a great program because if you pass their qualifier, what they call the combine, they'll actually give you money to trade and pay you to trade. But you need to meet their performance criteria, which is not easy, which is what Tony's question is about. Tony asks, when looking at the Top Step program, I do not see how to maintain their rules and use the trade manager effectively. Example, they say there is a limit to the number of contracts you can trade, but there's no way I am aware to tell the trade manager to trade 3 contracts unless you use the manual settings, and there goes your ability to have trade manager manage your risks. So what's the point? They have, like I say, very strict criteria that they get people to meet in order to pass their combine. Now, I agree with you. I think that their way of doing things is not necessarily the best way, but it's their playground, so they set the rules. They have max drawdowns on positions. They pretty much demand that you run tighter stops than what a lot of times I'm comfortable with. But like I said, it's their playground, so they set the rules, and it's you have to just try to work within those parameters. You're going to find yourself using the manual rating a lot when you're using the Top Step combine. So you're going to have to kind of eyeball what your risk is going to be. If you know that you're going to run 2 contracts and your risk is approximately $300 or $400, whatever the case may be, then you're going to have to approximately set your stop in that neighborhood. Yeah, there's no good solution for it, Tony, I'm afraid. We're getting beat up here a little bit. I may bring my stop in again below this little swing low. There, I'll give them this bar that they're working on. So not a lot of follow through on that macro pullback signal. I did get a good entry on it, which was nice. But shortly after filling us, we took some immediate heat on the position. Okay, I might hold my stops there. Not much follow through, but I suppose that's to be expected on a report type day. Note that if I had run my original stop down here, I would not be stopped out yet on our buy, and I could actually roll my stops up here now. So whereas I took a small loss here, it could have actually turned into a profitable trade if I wasn't so quick with my stop. All right, this one I'm going to take to break even now. Just because we're struggling here, we're back at the highs. It just seems like that kind of day. If they're going to go, come on, let's go. Let's get this going. Excuse me. Yes, thanks, Tony, pointing out a late filter entry signal here in the Falcon. The late filter entry signal occurs when the filter goes out of sync and comes back into sync. The trend line itself never changes color. That's very important. And we have a chance at a second push on this signal as well, meaning the signal has engaged, and you can see prices have retreated from the signal. So we kind of know the limit of the market here at the moment. Oh, I think I just got tagged on my reversal. Yes, I did. I got tagged at break even. And that's okay. We're really sideways here this morning. You know, we had the early run up, but since then, that's been our trading right there. Tight little sideways trading range. And excuse me, even though the market started with a bullish note, it petered out pretty quick. Oh, might have spoke too soon. Everything's still bullish. 4 arrow consolidation here in the Hawk. Late filter entry in the Falcon. The only thing that's looking mildly bearish is the Raptor, where we might have a double top type signal building and a possible sell signal. Well, it makes sense. If the market doesn't want to test the top end, it's usually going to try to test the bottom end. I would still rather try to buy, I think. All right, here's a red bar buy now on the hawk. Dare I try this again? Now notice in each of these trades where I took the early stop out, if I had left my stop alone, I would not have been stopped out in either of them. But I can't help it. This whole 54, 34, 35, 36 area, that's a number to make note of because it's going to be an area of influence for the next couple of days. So certainly for tomorrow, I would think. Come on, what happened to all the buyers, for crying out loud? Ay, 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 ay. I could have set up to short, of course, below the red bar buy signal. which would essentially be selling below 54.32. That's going to be another number to bear in mind for the next few days. There we go. Okay, so I got at least one bullish bar to recommit. So what I'm going to do is I'm going to roll my stops in, looking for that, hopefully now to carry some follow through with it. Otherwise, I will take the early stop out again. Some of you might be seeing this as a little bit of a sideways pennant type formation. Come on. Don't make me break out the mouse. Come on, you can do it. Tony says, man, it hurts to be in this trade long. Yeah, I know. We're really sweating this one, aren't we? No, no question we have ourselves a tight little trading range here. Lots of sideways, lots of overlap. If we can see the market trade up here to 54.38, we should actually see a little bit of a follow through to it, a little bit of a run out. Christian asks, would it help not to be in the trade when Trade Forecaster is printing scalp mode? Well, no, not. I don't think so. You need to remember what the Trade Forecaster is trying to do. It's trying to tell you what the current market environment is and what the next one is likely to be. Now, it seems like it's nailed this one. It says we're in scalp mode for about another half an hour. So what does that mean? Well, that means when we're in scalp mode, we're probably not going to see a lot of follow through on the signals, or it's going to be slow and painful, just like what we're seeing this morning. Likewise, the pullbacks are likely to be a little bit more pronounced. So what does that mean for us as traders? Well, we should probably either go in light, I'm just going in with a single contract here, or we should be prepared to run deeper stops in order to ride out the choppiness. We should probably take profit on target rather than try to run it out because we're not expecting as much follow through on the signal, or that is going to be reluctant to give us follow through on a signal. So scalp mode is exactly what we're in right now. About the only thing I'm doing differently that perhaps I shouldn't be doing is I should just take the profit when I have it. There's no question that trading when the market is in a scalp environment is tough. It's much easier to trade when the market is going somewhere, or at least there's some more follow through on the signals. The most difficult thing, of course, when the market is like this is to exercise patience. still in it. We're still in the trade. Come on. Well, all we can do is wait. Come on. Get above there. That again, this whole 54, 36, 37 area. It's crazy. There we go. All right, come on, let's get above 38. Okay. All right, so I'm going to take this trade to break even now. And I'll let it sit there for a moment. Okay, we're getting some traction. I'm going to move into using the parabolics now for my stops. Oops, sorry. Come on, don't stop now. Made us wait all this time. Here we go. We saw a little breakout, and now we're just kind of on hold again. Aye, now we're going to hold up here at 54.42. Come on. There we go. All right, so the parabolic's rolling the stops up here rather quickly. is it looks like we might be seeing a top come in to this market. Come on, keep going. We may just ride this one out. I don't think it will, but that would be something. Okay. Whew, that was hard work. Okay. Well, we'll see now whether a top is in. I almost suspect it is, just because it took so long to get out of that sideways channel. We got the run up, and then nothing. Tony, you can ask as many questions about Top Step Trading Combine as you want. Tony asks, since we're not too busy, one more thing about the Top Step, and then I'll drop it. Seems to me to be successful, you need to learn to trade to pass the combine and not necessarily trade the way we do in the trade room, especially risk management. No, like I said, their criteria for risk management is different than ours. We base our risk, or we believe the best way to protect yourself is to base your risk on a certain percentage of your capital. They don't do it that way. They have a maximum drawdown that they will allow on any position, because they need to go to their investors and they need to say, hey, if you invest here with Tony, Tony's going to, his worst drawdown was 3% or 1.5% or whatever. We don't calculate our drawdowns that way, because we primarily trade the futures markets. Drawdown is really a phenomenon of the stock market, where a trader will look at it and they'll say, okay, well, if I'm going to buy this stock at $40 and I'm going to get a 20% drawdown on it, or a 2% drawdown on it, or 5% drawdown on it, I know what that stock is going to be worth. So you are correct. If you're going to try to take advantage of what Top Step is doing, like I say, it's their playground. You got to pass their rules, which will not necessarily mean trading exactly the same way we do here in the trading room, even though, like the trade that we were looking at here earlier, where we bought up here and had my initial stop down here, this may not be doable in the Top Step Combine, even though it was just an initial risk. And you can see that as the market tried to move lower, you had opportunities to roll your stops up and reduce your risk and even get into a profitable position. They don't trade that way. They're not prepared to allow you to offer up $400 on a trade like this. They'll say, Tony, you're going to have to cap your risk at X dollars, whether it be 200 or 150 or whatever. And that's just going to be the way that it is. If you want to take advantage of what they're offering. And I think it's certainly worth the effort. It's a great program if you can pass it. It's a stressful program. I won't lie to you. Their parameters, like I say, are very stringent. I like to think the way that I trade is a little bit more relaxed. Or at least, to suit my personality, it's a little bit more relaxed. Yes, absolutely. Tony says our Colorado friend had fits with the drawdowns. That would be Ray Burke. For those of you who don't know Ray, yeah, he had a hard time with the drawdowns. It's like I say, they don't give you a whole lot of wiggle room. They want you to find those signals. They want you to find the ideal signals, like everybody in the trading world. As somebody who's been a trading instructor, so to speak, for the last 20 years and counting, I'll tell you one thing that all traders have in common. They all want you to show them the signal that they can enter here and put their stop loss right there. That's the trade that all of them want to see. They don't want to see the signal where you enter here and have to put your stop down here. Never mind the trade works out. They don't want any drawdown. They want the signal. Show me the signal that I can take like this and I don't have to experience any drawdown. Well, I'm sorry. That's very, very difficult. But, like I say, it's going to work for somebody else, essentially. It's their money. They set the rules. If you can pass the test, it's a good gig. I think they allow you to keep, I haven't looked into it for a while, but you get to keep a reasonable percentage of your profits. If you're a really good performer, I think they allow you to keep up to half. Half your profits, and it's not even your money. That's at risk. That's a pretty good gig. So, oh, see, Daniel says I think it's 80%. So you can work it up to an 80%. You keep the money. It's their money. And of course, if you're performing, they're just going to throw more and more money at you. So it's, like I say, it's a great gig. but it's not without its challenges. Yeah, I'm getting a few more comments here about the top step rules and how difficult it is to stay with them. And it is. And it's not that it's, not legit, but like I said, it's their money, their rules. Well, I wonder, are we going to see another run here? Billy's asking, are you presenting on Wednesday? Yes, I am, Billy, and that's a good point. No trading room on Wednesday. I'm going to be doing a top step presentation. A lot of you will have seen the presentation material before, but hey, you're more than welcome to stop by. But the presentation overlaps our room time, so. Yeah, Christian says with Top Step Trader, the biggest challenge is the daily loss limit. With 50,000, you can trade 5 lots, and with the 20 tick stop loss, you reach very fast the daily loss limit of 2,000, which means you're out of the game. Oh no, Christian says it's only $1,000 loss limit on a $50,000 account. Yep, the rules are very strict. There's no question about it. And I agree. I don't think that they're reasonable, but they're looking for they're looking for the super trader, really. They're looking for the guy who can pull it out of the bag, or girl. And I agree, that's not necessarily how I would trade my own money either. No, Elmer, I don't know. Elmer asked, do you know how long even the ones who made it last in the system? No, I don't. I've never really looked into the Top Step program. I've toyed with it. I don't know, maybe it's something I should give a go just to see what everybody's talking about. I've always been content to do my own trading, but I don't know. It might be an interesting scenario. That's right. Like Christian says, the only super traders are the ones here in this trade room, and that is 100% correct, Christian. We're the cream of the crop right here. Don't let anybody tell you otherwise. All right, well, we're drifting again. We're kind of now into the top end of this trading range that we established earlier. what I suspect might happen, because the market has seemed reluctant to go higher, is that we may see a test of the high and a possible failure. Now, I'm just guessing at this point, but that almost seems to be the way it's unwinding. And we had a decent breakout here, short-lived. Mike's asking a few questions about the Top Step program. Did they use system, or what? I think Mike's asking, what system did they use, bar type, time frame, etc.? It is entirely up to you, Mike. They don't care. We've had some DTS owners do the Top Step program. A few of them have passed. I have kind of fallen out of touch with them. I don't know whether they're still in the program or not. But you can trade any market you like. You can trade it any way you like, providing you fall within their risk parameters. Yeah, if you've never checked it out, it's an interesting concept. It really is. Like I said, it's not easy. It's far from easy. But if you think that's something you might like to do, then by all means, check it out. Yeah, a few more comments here. Gary says they won't let you trade the Russell or the DAX. Again, there are limits, but it's their money, right? I do know I spoke to them about the bond market before and about crude oil, I think, because they've got so many index traders. They've got so many, especially E-mini traders. Not as many NASDAQ traders, which is my own personal preference. All right, so we're starting to unwind here now. We're going to get a red bar buy signal. We did get a very sloppy number 2 here on the Raptor. I say sloppy because the test of the extreme actually looked like this, where it actually traded above the high before it flashed a signal. The proper test of the extreme, and the reason that one didn't trip, is the proper test of the extreme normally prints below, and we are likely to get at least something resembling a retest before we get another number 2 short signal. Oh, there we go. So a quick retrace here to the hard edge. We'll look for a chance to get short now. Oh, are they not going to give me a chance? Come on. Well, we do have a first micro macro cross here. I would have thought we'd get a little bit more of a pullback. And that's entirely possible still, hence the rather substantial stop. Yeah, Elmer says, this sounds like somebody stole your Ferrari. I know, it's the it's the neighbor's kid. You remember what it was like being that age. You think it's a good sound for your car. Gerard's asking about the bonds. He says, speaking of the bonds, and notes too, which system would you recommend given that you did not want to take a lot of risk, say 5 or 10 ticks? Maybe a bit more for the lower tick value instruments. Generally, are bonds a good instrument for trading with these systems? Yes. The stop loss, however, stop losses are the most difficult part for most traders to get a handle on. The problem with a stop loss is there is such a thing as a proper stop. And rarely is it an arbitrary value. Rarely can you say, oh, I only want to risk 5 ticks. Well, you can. You certainly can risk 5 ticks, but at the end of the day, it's your money. But the 5 ticks may or may not be a wide enough stop to keep you out of trouble. This morning, we had, a couple of signals print, and you can see the drawdown, if you will. So from here, from our entry to our drawdown, was about 6 ticks. So a 5 tick stop would have certainly kept you out of trouble there. But I can probably find you times where a 5 tick stop would not have been enough to keep you out of trouble. Now, the good thing about the DTS system and the Raptor system is that they are very good at picking up immediate market momentum. But that doesn't mean that you're not going to see any kind of pullback. Here, for instance, on the first micro-macro cross signal in the hawk, and Daniel's asking about that, the first micro-macro cross is the first in-sync signal after the micro line, that's a thin one, and the macro line, that's a thick one, cross over on your hawk. It's a very high probability signal. You can see here was a first micro-macro cross to the upside. Here now, a first micro-macro cross to the short side. It may well turn out that I could have got by with a stop right here. But I don't know that yet. Right now, the best place for my stop is up here. This is the proper place to put your stop. If you don't feel like risking this amount, then don't take the trade. You don't have to take every trade. But your stop loss is not a loss unless it gets hit. Which stop is more likely to get hit? The one that's up here or the one that's down here? I know it's a rhetorical question, but it amazes me how often traders are afraid to lose anything will jam their stops in so tight that they practically guarantee a stop out. Whereas, okay, this stop up here may be, $200 or $300, but the chances that I'm going to take that full stop out are pretty slim. If you want to improve your trading, stop strangling your trades. Yeah, well, see that's good. Like Gary says, he's done some studies, and he says I've shown that a 7-tick stop is a good stop based on using a 3-tick bar. Okay, good. Gary's done his homework. He's comfortable running a 3-tick bar and a 7-tick stop loss. That's great. Now, don't think for a moment that I want to take a full stop out here. But at the same time, like I said, I've got to give the trade at least some room to sort itself out. I don't want to get tagged on the slightest little hiccup. And I get this all the time from people. They'll say, "Oh, well, I'd never put my stop up there where you have your stop." Oh, really? Why not? Oh, it's too much risk. Well, okay, but it's not a loss unless it gets hit. See, had I put my stop above here, like a lot of traders do, I would be out. Okay, so it may have cost me $60 or $70. Not a big deal. But it is a loss at this point. I am out of pocket $60 or $70, whatever the case may be. That's gone. That's out of my account. See you later. But with my stop up here, I haven't been stopped out just yet. Somewhere through here, the sellers are going to recover. How do I know that? Well, I have a pretty good idea based on how the market unfolded this morning. We've just seen them breach this bottom end of the trading range. They're almost guaranteed to give me at least one more move lower as a result. So when I get that next move lower, okay, well then I'll start to roll my stops down. Yeah, exactly. Aspen says we all have a tendency to think of this stop loss amount as an actual loss, that we've already lost this money. Okay, so it's $315. Everybody looks at that and they think that they've already lost that money, when that's not the case. That's your worst case scenario. That's your parachute, your safety net. Gerard asked, do you look at stops as a catastrophic avoidance as opposed to just simple loss per trade minimization? Yes, I think that's a great way to look at it. This is my worst case scenario. I know that if the trade comes unglued and the market beelines up here, the market, whatever, Elon Musk just developed a Tesla that, you know, you can buy for $200 or $2,000, and the NASDAQ just takes off like a rocket. This is my worst case scenario. Worst case scenario, I'm out of pocket $300. But it is an amount that I can afford. It is based on a certain percentage of my capital. So I've not overextended myself. I think traders run into trouble when they overextend their positions. They get into scenarios where they risk more than they can afford. And there will be times you're going to look at a trade and you're going to say, nope, sorry, I just can't afford that. Or you may look at the trade and say, okay, I think it's going to go short. I'll wait for a macro pullback, or I'll wait for a green bar sell, or I'll look for, you know, a better opportunity to short from. Yeah, like Mark says, I'd be happy with the $20,000 Tesla. That would be enough to rocket the NASDAQ as well. Now, to be sure, this is a pretty crappy fill, but it is a first micro macro cross. I know it's a high probability signal. I've got to take a little bit of heat on the trade. None of that is a real surprise to me. There was a chance that based on this first micro macro cross, based on the momentum we saw coming down here, that the market could have, you know, gone another couple, 3, 4 bars lower, hit my profit target, and then gone into a macro pullback. But it didn't. Hey, way to go, Gary. Gary's up 822 today after commissions. Nicely done, Gary. Knocking it out of the park. Gary says, just getting back into Indicator Warehouse and the Raptor after a boondoggle with some other software. Could have saved money if I just stuck with the Indicator Warehouse stuff. This is pretty good software, folks. It is, I think, the best that you can buy. All right, I think we're going to close up shop here. If you are looking for another opportunity, look for a chance to get short. I think we're going to see another push lower here. This macro pullback signal on the hawk is an early one you can hop on board. We might see a little bit more of a pullback here and perhaps a number 2 signal print for the NASDAQ. But I do believe we are in for one more move lower before the market likely to go sideways pending the Janet Yellen announcement. All right, boys and girls, we'll catch you tomorrow then. Bye for now.